few options for your intro. Choose the one that best fits your style. Option 1, concise and direct. Hey everyone, welcome back to Forex Scope. Today, we're diving deep into EURGBP on the 15-minute and 1-minute charts. If you're looking for clear analysis and actionable trading insights, make sure to hit that subscribe button so you don't miss out. Option 2, slightly more enthusiastic. What's up, traders, and welcome to Forex Scope. I'm excited to bring you our latest analysis, focusing on EURGBP with a close look at the 15-minute and 1-minute timeframes. We'll be dissecting potential moves and trends. If you haven't already, smash that subscribe button and turn on notifications, you won't want to miss what's coming. Option 3, focus on value proposition. Hello and welcome to Forex Scope. In today's video, we're bringing you a focused analysis of EURGBP, breaking it down on both the 15-minute and 1-minute charts. Our goal is to provide you with the clarity you need to navigate these markets. If you're serious about your Forex trading, do yourself a favor and subscribe now. Option 4, friendly and conversational. Hey there, Forex Scope family. Great to have you back. Today, we're zeroing in on EURGBP, examining the action on the 15-minute and 1-minute charts to find those opportunities. If you're here for smart Forex analysis and some directional clues, make sure to subscribe so you're always in the loop. The support zone is identified around the price level of 0.87801 to 0.87844. This area shows multiple instances where the price has reacted and bounced upwards, indicating significant buying interest. Notably, the period between November 6, 2025, 22 o'clock, timestamp 176-246-6400, and November 6, 2025, 2345, timestamp 176-247-2700, shows several candles with long lower wicks and some consolidation, suggesting accumulation at these lower price levels. The lowest price reached within this timeframe is 0.87801 and the highest within this specific consolidation zone is 0.87876, confirming the boundaries of this potential support. The presence of multiple touchbacks and the formation of dojis or small-bodied candles within this range suggest that buyers are stepping in to defend this price level, creating a floor for the EURGBP pair. This zone represents a significant area where past price action indicates a strong willingness for buyers to enter the market and halt further downward movement. The resistance zone is identified around the price level of 0.88110 to 0.88128. This area shows clear signs of selling pressure and price rejection, preventing further upward movement. Specifically, the period between November 7, 2025, 10 o'clock, timestamp 176-250-9600, and November 7, 2025, 10:45, timestamp 176-251-3200, exhibits candles with strong upper wicks and notable price reversals downwards after reaching the higher end of this range. The highest price reached in this period is 0.88128 and the lowest price within this specific consolidation and rejection zone is 0.88060, establishing the boundaries of this potential resistance. The repeated failure of the price to break decisively above this level, coupled with the formation of bearish engulfing patterns or significant upper shadows, indicates that sellers are actively defending this price range. This zone signifies an area where the supply of EURGBP has historically outweighed demand, leading to price declines and acting as a ceiling for the currency pair. This resistance zone is identified by a period of consolidation and upward price action that struggles to break through a specific level. Observing the price data from timestamp 176-254-6740, 20 hours and 19 minutes, to 176-254-7340, 20 hours and 29 minutes, we see the price hovering around the 0.87860 to 0.87865 range, forming a minor area of resistance. However, a more significant and clearer resistance level emerges later. Between timestamps 176-255-1420, 21 hours and 37 minutes, and 176-255-1540, 21 hours and 39 minutes, the price reaches a high of 0.87884 and a low of 0.87878. This area, particularly the upper bound of 0.87886, acts as a ceiling, with multiple candles failing to close above it. The candles in this range, such as the one at 21 hours and 37 minutes with a high of 0.87881, and the one at 21 hours and 38 minutes with a high of 0.87884, clearly indicates selling pressure and a reversal from higher prices. The presence of the upper Bollinger Band, which is closely tracking the price action in this zone, also suggests that the price is reaching its upper limits, further solidifying this as a strong resistance area. The price struggles to sustain its upward momentum beyond this zone, leading to subsequent pullbacks, reinforcing its significance as a barrier to further price increases. The proximity of the high price within this defined range to the upper Bollinger Band reinforces the notion of price exhaustion and rejection at these levels. The distinct failure of the price to break decisively above this upper boundary signifies strong selling interest at these elevated price points. This support zone is identified by a clear area where the price repeatedly found buying interest and reversed its downward trend. Observing the price action between timestamps 176-255-2620, 21 hours and 57 minutes, and 176-255-2680, 21 hours and 58 minutes, we see a significant drop in price to a low of 0.87801, followed by a sharp reversal. The candle at 21 hours and 57 minutes shows a substantial wick touching down to 0.87829 before bouncing back up. The subsequent candle at 21 hours and 58 minutes plunges even lower to 0.87801, but again, there is strong buying pressure that pushes the price back up, forming a large lower wick. This pattern of aggressive selling followed by an equally aggressive buying response indicates a strong confluence of support. The price is being rejected forcefully at these lower levels, suggesting that buyers are stepping in to defend this price range. The lower Bollinger Band, which is at 0.87826 during this period, is also in close proximity to the lowest price point reached, acting as a psychological and technical support. The significant volume associated with these bearish candles, coupled with the immediate reversal, points to a potential accumulation or capitulation event at this support level, making it a robust area to watch for potential bounces. The extensive lower shadow on the candle at 21 hours and 58 minutes, reaching down to 0.87801, is a very strong indicator of buying interest at these depressed levels. The EURGBP is currently trading at 0.87813, a level that has shown resilience as a key support zone. The historical data indicates that prices around 0.87801 to 0.87844 have acted as a strong floor, with multiple instances of price rebounds. The presence of long lower wicks and consolidation in this region suggests buying pressure is actively defending this area. Concurrently, the resistance at 0.88110 to 0.88128 has proven to be a significant barrier, with repeated rejections and bearish price action. The Fibonacci retracement levels also provide additional confluence, with the range between 0.87801 and 0.87886 being particularly important. Given the current trading price near the lower support and the historical tendency for bounces from this zone, a short-term upward movement is anticipated. However, the strength of the resistance at 0.88110 to 0.88128 will be a crucial factor in determining the extent of any upward trend. The recent 1-minute price action shows price oscillating within a tighter range, but the overall sentiment from the broader 15-minute chart points towards a potential test of the higher resistance levels. Traders should monitor the price action around the identified support and resistance zones closely for confirmation of any trend continuation or reversal. The tick volume data, while showing fluctuations, does not indicate any overwhelming selling or buying pressure that would drastically alter the immediate outlook from the established support and resistance levels. The Bollinger Bands are currently showing a narrowing range, suggesting a potential buildup of volatility that could lead to a breakout. However, the proximity to the lower support suggests that any breakout to the downside might be limited, while an upward move could be more sustained if the resistance is breached. The confluence of technical indicators suggests a balanced market currently, with a slight bias towards a retracement from the lower support. The overall trend appears to be in a consolidative phase, with potential for a directional move once significant price levels are breached. Traders should consider the previous trading session's behavior near these key levels. The Fibonacci levels also hint at potential pivot points for future price movements. The current price is sitting right at the lower boundary of a critical support zone, making a bounce a more probable scenario in the short term. The resistance zone is quite far from the current price, allowing room for an upward move. The overall market sentiment, as reflected in the provided data, is one of cautious trading, with key levels holding significant importance.